Well, in today's dynamic and interconnected world, the seamless integration of technology and business has become an imperative rather than a choice. The evolution of information technology has not only revolutionized industries but has fundamentally transformed the way organizations operate, communicate, and compete. As businesses strive to stay ahead in a highly competitive landscape, the alignment of IT initiatives with broader business goals has emerged as a pivotal strategy for success. Good evening, ladies and gentlemen. I am your host, Smriti Rastogi, and today I would like to welcome Mr. Hemant Joshi, Vice President, Credex, who will be taking you through some of the IT requirements that are shaping the business landscape and how to align them with your business requirements. So, without any further ado, let's dive in. The stage is all yours, Mr. Hemant Joshi.
Hello everyone. Uh, I am Hemant. I am part of product management team at Credex. So Credex, as you know, we are India's leading supply chain finance solution providing platform. When it comes to supply chain, we work closely with the small and medium businesses, and we have understood their problems to the detail. We have spoken to multiple customers. I have spent more than 6 years with the organization working in the SME space. And today I will be speaking about cash flow, which is very important aspect of any business, and how technology can help you manage your cash flows better and monitor them better. So that is what I will be touching upon, and I have prepared a small deck of presentation where I'll be talking about few aspects around that. So hopefully we will have some takeaways from this, and at the end of the presentation, I will open the floor for any questions. If you have any doubts with my whatever understanding about the businesses and cash flow that I have, I'll try to answer those questions. All right. So, as I said, we are talking about leveraging the technology for effective cash flow management. And the technology in today's world is playing a significant role in any aspect of the business. And the finance function or the cash flow management is not left untouched by the technology. So, firstly, we'll talk about the importance of cash flow management and monitoring. Most of the people who are into businesses, they understand it very well. So, the cash flow is important for business survival. If the cash flow is misaligned or skewed on one side, it can have severe repercussions to the business and may challenge the survival of the business itself. Working capital management is another aspect why cash flow management is necessary, because you want to have optimum liquidity for the working expenses whenever you are running a business. Debt servicing is another aspect which becomes critical. Any business would start with debt, and usually what happens is there are monthly outgo of these debt EMIs, and if we are unable to service those debts properly, then it severely impacts the credit history and rating of the organization, which is a significant issue for the success of a business. Strategic decision making and budgeting planning, these are the activities which are ongoing on a business, and those are very important activities. And if the cash flow is not managed properly or not monitored properly, these decision makings may lag. Budgeting and planning exercises may be futile or inaccurate if the cash flow management is not done properly. And last but not the least, the business growth, which every business is aspiring to have. That growth is significantly dependent on the cash flow. If the cash flows are not managed properly, you will not have enough cash to put into new opportunities and new business growth areas. So these are the importance, and I mean, all these point in itself are very critical for a success of any business. So everyone would understand that the severity of or seriousness of a good cash flow. So for I mean, most of the people I'm sure would know what is cash flow, but in case there are any people which are new to this term, so I will just explain what constitutes the cash flow. So cash flow is basically the inflow and outflow. Outflow is your account payables, and the inflow is the accounts receivable. So there are different categorization within the outflow and inflow. So for example, on the outflow side, the operational expenditure is there, where you can categorize the salaries, the rent payment, the vendor payment for raw material, which is nothing but COGS, cost of goods sold, the utility payment, etc. These are the operational expenditures. There are investments which a business makes. Let's say they are procuring a new asset, machinery, any long-term investments, or they are setting up a new business vertical, new factory, new manufacturing unit, new office, anything. I mean, these are the investments that business does, which require cash outflow. The financing aspect is there, the repayment of the debts, share buyback, dividend payment, any of these kind of liabilities that they have to pay off, that goes into the outflow of the cash. When it comes to inflow, there are operational receivables, so that is the sales revenue, service fee, collections, etc. The investments, let's say they are selling off any asset, doing any mergers and acquisition, when they are selling off any business unit to any other organization. The ROI, let's say they are having a long-term asset, and it is giving you the interest income. So these are the investment inflows, and then the financing inflows, where you go out and take debt, issue shares, you go for VC capital or anything. So these are the inflows, and these two are the major building block of the cash flow, the inflow and the outflow. So usually when we talk about the cash flow, we mostly talk about the trend of the outflow and the inflow, and the difference can be constituted as either in the deficit or surplus. So cash flow surplus is always a like a positive situation or aspired situation to be in, and cash flow deficit can happen for the growing business, especially in the small and medium enterprise segment. Cash flow deficit is a common phenomena, and there are ways to like bridge these cash flow gaps, and these cash like bridging these cash flow gaps are important. And I will over the next slides will talk about how technology and new age instruments can play a good role in bridging these gaps. So now coming to the challenges, what any CFO or a promoter of the organization faces in the cash flow management. So one is inefficient manual processes. So there are a lot of manual processes in the smaller organizations, which are not very efficient, and they increase the cost of operations for any business. The segregated data island is another issue, because at any given point of time, any organization is running multiple like software tools, or like there will be a ERP, let's say a Tally, or a any other software which is maintaining the account entries. There will be a product which will be let's say CRM, which is taking care of all the outstanding invoices which needs to be collected. There can be any supplier portal or supplier management thing, where all the payable invoices are there. So these becomes non-interconnected data islands which are working in silos. And when I talk about cash flow, it is a consolidated picture. So these segregated data island become a great, like a big challenge for doing a seamless cash flow management. Lack of data visualization is a result of segregated data islands. If the data is not visualized, data is not available to process, or it takes time to process data, then you cannot take just-in-time decision. So just-in-time is a terminology coined through the manufacturing segment, manufacturing sector, where they used to procure the inventory just-in-time to manage their operations better. And it has flown to almost all the other aspects of the business. So if you have to take proactive decisions, real-time data availability and data visualization is very important. Delayed collections is another significant aspect, because although the organization might have negotiated good payment terms so that the cash flow situation is balanced, but if the collections from the customer is delayed, then it creates unnecessary pressure on the treasury to have liquidity, and thus mismanage the cash flows. So and these delays, if they are not predictable delays, they like add more problems, because the planning exercise would not have any visualization or uh, uh, forecast of when the cash is going to come in. So that creates a huge problem. Manual errors are very common practice when there are majority of the processes manual, and these manual errors lead to a lot of leakage of the cash in hand. So for example, raising wrong invoices may lead to delayed collections. Raising late invoices may lead to delayed collections. On the payable side, if you are making payment to a wrong invoice, it might cost treasury the cash it needed for the constructive purpose. Similarly, if there are reconciliation issues in the GST paid by your suppliers, then you lose a lot on the input tax credit, and that can also use up your working capital and impact the cash flow management activity severely. High debts again are a significant issue. On one hand, they cause balance sheet problems, where the creditors see it as a negative on your if there are high debts on your balance sheet. At the same time, if there are high debts, a lot of inflow is used up in servicing these debts, and a lot less cash is available for making operational expenditures and capital expenditure for the growth, and thus creating huge deficit in the cash inflow. So high debts are also unfavorable for the cash flow management. Inaccurate forecasting and budgeting. So if all of the above points are true, then there will be a lot of inconsistencies and inaccuracy in the forecasting activity and budgeting activity. And these activities, if they are not done with decent accuracy, then the entire planning goes on toss, and the business growth projections and business growth plans get severely impacted. So when I have talked about the issues or challenges that are faced in cash flow management, now I will talk about new age method which can help in doing a cash flow management a lot better. So on the account receivable, that is the inflow side, there are the technologies available which can do automated collections, real-time cash posting, robust customer evaluation. So customer evaluation is another aspect which is mostly overseen by many organizations, but the customer evaluations helps you understand what payment term you should discuss with the customer, when to start the follow up, how much credit exposure you can take against a particular customer. So these are important aspect. Timely dispute management, because whenever there is a trade, the disputes are a part and parcel of the game. and resolving dispute faster, and monitoring all the disputes helps in controlling the DSOs, that is daily sales outstanding, which is basically the timely inflow of the cash. So there are a lot of technology available to automate the collections, do real-time cash posting, so that the entire organization have a data visibility on which invoice is paid by the customer, which invoice is not paid by the customer, and accordingly the follow-ups can happen, collection activity can carry on. So the primary objective on the receivable side is basically to get money on time, whichever is outstanding against any of the debtors of your organization. So that is the major reason why the automation can bring a significant improvement in the cash flow management, because the cash flow will be received on timely manner. When it comes to the payables side of things, automated processes reduce the errors and make the process seamless, more efficient. Real-time data analytics and forecasting is important, so that at any given point of time you have next 6 months or next 8 months or a year of cash outgo forecasted, and you can plan your liquidity positions accordingly. Maintaining optimized payment term, that is also very important activity when dealing with the suppliers. So basically, the payment terms with your customers should be in line with the payment term with your vendors, so that there is a balance in cash flow, cash inflow and outflow. Fixing the leakages, so any revenue leakages because of wrong invoice payment, fraudulent invoice payment, or the GST input tax credit leakage. So all these leakages should be fixed, and these are the things which can be done through new age technologies, which I will talk about. Then comes the financing aspect. I have kept it separate because it is a very important aspect for any business. And traditionally, the companies have been dependent on few financing options like OD limit, CC limit, business loans. But the problem with these is one, it is not a just-in-time financing. It is like you have to prepare for financing, take a credit limit. You have a pressure from the financial institution to maintain the utilization levels, and it shows up in your balance sheet as debt. And many a times collateral is also required for these kind of traditional facilities. So there are new age financing methods which can be significantly better than the traditional methods. For example, off balance sheet invoice discounting is one of the product which is out there, where you can discount your receivables or extend your payables through invoice financing. And most of the time these are off balance sheet products, and you have to service them on a payment term basis, or 30 days, 60 days, 90 days. So there is, I mean, whenever you need capital, you can opt for invoice discounting and get your invoices discounted. So this is usually free of any collateral, so there is no hypothecation, and these are off balance sheet products, so they don't show up in your balance sheet. So that increases value and credit rating, cost of financing for any organization. Utilizing the unutilized credit limit on your credit cards. So this is another aspect. Nowadays, it has become popular. What happens is usually with the slightly bigger organization, there is a credit card, company credit card issued by the banks, and these cards are mostly used for travel and entertainment expenditures. But nowadays there are solutions available where you can use these credit limits for paying your vendors, even if these vendors do not have acceptance of credit card. There are technology solutions available where you can use these credit cards to make vendor payment. Alternatively, for the smaller organizations, many times we have seen that promoters use their personal credit cards, because they also have good credit limits available on their card, and if they want, they can use their personal credit cards for making vendor payment for their businesses as well. So these are the solutions which are available nowadays, very over the top kind of solutions, where you don't have to worry about integration. Just do a quick sign up and start paying your vendors using the credit card. Revenue based financing is another aspect you can explore, if especially D2C kind of brands where the revenue is significantly increasing. And cash discounting is where you are B2B business, and you can go ahead and offer some cash discount to your customers in return of early payment. So this is another solution, and these all solutions are without any debt, without any collateral, just in time, whenever you want, as you want, these kind of solutions. So these are new solutions available in the market today, which are very useful. Coming to the benefit of technology, so it increases the accuracy because it is a machine that is doing repeated job over and over again. So it reduces the chances of errors. It gives you real-time monitoring. All the data, graph, analytics is available on real time, and you can do proactive decision making on the real-time data. Predictive forecasting, there are improved and refined algorithms available, models available, which can do a very accurate predictive analytics and forecasting of cash flow situations. And they take care of the behavioral aspect, they take care of seasonal aspect and all those things. Automation increases the efficiency of the function and stops the leakages, because the reconciliation, etc., automated reconciliation, etc., can stop the input tax credit, TDS leakages in case your customers are delaying TDS payment, your suppliers are delaying the GST payment. Those can be figured out proactively, and the actions can be taken on that. So what are the few technologies and tools available? So there are SaaS-based solutions available, as I talked about, either for making payment, for doing follow-ups, for doing reconciliation, for doing any automation of your finance function. There are machine learning algorithms which help in forecasting, which help in defining strategies. Artificial intelligence can do the correspondence work, follow-up work for the collections and all those things. Data analytics, BI, business intelligence tools are available, which can do a really good data slicing and dicing and visibility aspect. And robotic process automation is something where you can automate the mechanical work, which are non-value added work, and increase the efficiency of the functions. And you can use and put the personnel in doing more proactive and strategic work, rather than repeating a similar kind of work again and again. So these are, this is how the technology can help the organizations to champion the cash flow management and significantly improve their business growth and the visibility in the business. So that is all from my side. If there are any questions, I'm up for it.
Absolutely, Hemant. It was very intriguing. And as you just mentioned before starting your presentation, that there'll be many takeaways. In fact, there were. And we have got a few questions also from the audience. The first question is, how do we ensure that data does not go out misusing tech in fintech or MSME?
Sorry, could you repeat the question? How
How
does
do
data?
we ensure how do we ensure that data does not go out misusing technology in fintech for MSMEs?
All right. That is a very good question, and data privacy and confidentiality is the one of the significant aspect when using technology. And so every time, one part is limiting the number of softwares that the organization is using, because what happens is the more touch point the data has, the more vulnerabilities can come in. So if we can have a one-stop shop kind of solutions, those can contain the data outflow and thus the vulnerabilities. Second is whenever evaluating any solution for your organization, always go ahead and look at the data security practices that the organization or the vendor follows. That becomes very important, and there are consultants who can help in assessing the security. There is a penetration testing, BAPT kind of test reports you can ask from the vendors, so that you are ensured that any penetration, uh, all the checkpoints are taken care in terms of data security. There are practices of obtaining certificates like SOC 2, GDPR, HIPAA, ISO, PCI DSS. So based on what kind of product it is, there are different security certifications that the vendors go for, and these certifications always ensure that the best practices for data security are followed, and these solutions are the standard solution to use. So these are few things which I can advise on how you can ensure data security.
Well, the other question is, how can businesses strategically align emerging technologies such as AI and machine learning with their core business objectives to drive growth and innovation?
Yeah, so there are two aspects to it. One is applying artificial intelligence and machine learning in their core business, and that will vary business to business, segment to segment, industry to industry. So, for example, for customer support, there are chatbots available which significantly reduce the support cost. There are in manufacturing, there is a robotic process automation where robots does majority of the work instead of humans doing it. So these are few examples. I come from the finance background, so I will talk about finance, and it was covered in my presentation as well. So for example, when you have to, like, for a finance function, it is a generic thing across any sector, any segment of industries. So you have to do a follow up with your customer for timely payments. So for that, mostly what happens is the salesperson is doing follow up. The data is not available in the background. They follow up with the finance team to get the data. Then based on data, they design an email and send it out. So all this work can be taken care by the technology itself. And AI can generate automated emails based on the severity or seriousness, based on the delays. I mean, the dues, how many days due it is. So it can write a strict email, or it can write a mellowed down follow up, a gentle reminder. I mean, these kind of things AI, generative AI can do in the collections process. Similarly, when you do a book closure or cash posting, AI can automatically read the payment advices, remittance advices, bank statements, and do a automated posting in your accounting software. So these are the few things, few examples how AI can help the finance function, and these activity in turn help in. I mean, if the salesperson is spending less time in doing all these follow-ups, they will spend more time in generating business, and thus the business goals will align with the technology.
Right. Uh, I think you have very comprehensively answered all these questions and given us the important takeaways from your presentation to Hemant. Thank you so much for your active participation, thoughtful contribution, and dedication to enhancing the intersection of technology and business. As we embrace the IT trends that shape our tomorrow, let us all remember that our ability to align with our business goals will determine not just our success but our legacy in this digital age. Here's to the future where technology propels us towards new horizons and our strategic acumen steers the course. Thank you once again.
It was a pleasure connecting here. And just, I mean, as a parting note, Credex is a financial services organization. It helps the small and medium businesses to use technology and financing method, new age financing methods to manage their cash flows better. So any of the audiences, if they are willing, they can reach out to Credex and take help.
Definitely, that will be great. Thank you once again.
Thank you.